Hello, everyone. This is Mehak Agarwal from Vinod Kothari and Company. And in today's video, we'll be discussing an important topic, that is scope of partial business exit as a mode of scaling down a company. Now, this topic becomes pertinent in light of the recent Finance Act of 2024, which changes the incidence of tax in case of buyback from the company to the shareholders, such that buyback will no longer remain a feasible mode for companies which want to scale themselves down. So, what could be the other possible mode available to a company? So, a company which wants to partially exit from business and at the same time scale itself down may opt for the route of slump sale. Let us first understand the concept of slump sale. So, under slump sale, a company sells off one or more of its undertakings. Now, what is an undertaking? So, as per the Income Tax Act, an undertaking is a unit which has its own assets, its own liabilities, and a business function distinct from the company, such that it is capable of operating independent of the company. So, a company which wants to partially exit from business may sell off one or more of its undertakings as slump sale. Now, the erstwhile regime or the erstwhile taxation on slump sale attracted long-term capital gains at the rate of 20%. However, the Finance Act of 2024 has reduced the tax rate on long-term capital gains to 12.5%. This will make slump sale even more attractive now that the taxation on slump sale will be reduced from 20% to only 12.5%. So companies which want to scale themselves or partially scale themselves down or partially exit from business can go for the route of slump sale, which will attract taxation at the rate of 12% long-term capital gains. Now let us understand that when a company sells off its undertakings, it will generate a large amount of cash reserves. If a company decides to put these cash reserves into some other business, it would not amount to scaling down the company, but a mere redirection of the existing resources of the company. So effectively, for a company to effectively scale itself down, it will actually have to distribute funds back to its shareholders. This can be done by the company through the route of reduction of share capital under Section 66 of the Companies Act 2030. The company can pay back the excess paid of share capital it has and which it no longer needs back to its shareholders. Definitely, this will require the approval of the shareholders, and an application will also have to be made to the NCLT. In addition to that, objections from the regional director, the ROC, in case of listed companies, SEBI, and from the creditors will also have to be considered. Thereafter, the NCLT provides its approval for reducing the share capital of the company. Definitely, the amount received by the shareholders will be taxable in their hands. Now, it is important to note that when a company wants to pay back funds to its shareholders, it should also have funds itself. So where will the company get these funds from? The cash reserves that were generated upon slump sale can be used by the company for the purpose of paying back to the shareholders and thereby reducing its share capital. Now, another question that may arise here is, what about demerger instead of slump sale? So let us understand that for the purpose of demerger being tax neutral under the Income Tax Act, the Income Tax Act provides that at least 3/4 of the shareholders by value of the transferor company should become shareholders of the transferee company. So if you see, effectively, this leaves only 25%, which is a very small and selective group of shareholders, only 25% of the shareholders by value who can actually be given a cash out option in case of demerger. This may in fact not be the purpose or may not actually meet the requirement or the motive of the company. So if essentially speaking, if a company wants to partially exit from business and at the same time scale itself down, the best route that appears to be available for a company is to go for slump sale and subsequently combine it with reduction of share capital. That was all the discussion for today. Hope the discussion helps. In case you have any queries, please feel free to drop them in the comments below. Have a nice day.